All right, everybody, welcome to our Tippie webinar series, The Business of Risk Management. Let's go ahead and get underway. My name is Ashley Durham, and I am the Director of Alumni Relations at the Tippie College of Business. And as the coordinator of this program, I'm grateful to our alumni panelists and our moderator, Thomas Barry Stozel, for sharing their time and expertise with us today. This alumni panel series will focus on different industries, all under the title of The Business of. This series highlights the knowledge, expertise, and careers of Tippie alumni. And throughout this series, we've been able to highlight a variety of industries that our grads are influencing every day. I'd now like to take a moment to introduce Thomas Barry Stozel. He is an associate professor and the nationwide faculty fellow in the Department of Finance at the University of Iowa's Tippie College of Business, where he serves as the faculty director of the Emmett J. Vaughn Institute of Risk Management and Insurance. Prior to joining the faculty at Iowa, he was an associate professor of risk management and insurance at the University of Georgia and the inaugural director of the Actuary Science Certificate Program. Thomas's research interests include enterprise risk management, insurance company operations, and insurance regulation. For his research, Thomas has received the American Risk and Insurance Association's Early Career Scholarly Achievement Award. And in his spare time, Thomas likes to go sailing with his family and is a member of the University of Iowa Sailing Club. So Thomas, I will hand it over to you.
Thank you, Ashley. Welcome, everyone. We have a mixed crowd today. We have alums from our risk management insurance programs, alums from other parts of Tippie, and also a number of students. So we will try to keep this interesting for everyone and interactive. So let me remind you that you are welcome to submit questions to our panelists in the Q&A tool here in Zoom. So please use that opportunity, and we have reserved some time towards the end of this panel discussion for your questions. Let me start with giving you a brief overview of the Vaughn Institute and what we have to offer. I like to describe our risk management insurance program as a relatively young program with a long history. Back in the 60s, 70s, and 80s, the University of Iowa actually had an insurance major under the leadership of Professor Emmett Vaughn. Unfortunately, the major was discontinued. And let me just say, the insurance industry in Iowa was not amused and lobbied generations of Tippie deans to bring some sort of a program back. And so in 2002, the Institute was formed as an innovative partnership between the Tippie College, the risk management insurance industry, and the state of Iowa. After Dr. Vaughn's passing, the Institute was named in his honor. We offer a risk management insurance certificate, and our certificate is actually available to any undergraduate students here on campus, regardless of their major area of study. Although I have to admit that the majority of our graduates are Tippie students. Over 560 have graduated so far. However, our footprint is much larger. We have over 300 students in our introductory course, Finance 3400 Principles of Risk Management Insurance, each year. And many of them end up accepting full-time positions in the insurance industry without ever finishing our certificate program. We are grateful for the strong support we have from our industry partners and our alums. Our partners help us to offer additional programs to our students to prepare them well for careers in the industry. We have speaker series, a student org, an internship program, a mentorship program, and we also have experiential learning projects as part of our coursework. We had a good run so far. As most of you know, the Vaughn Institute and its risk management insurance program received the Global Center of Insurance Excellence designation from the International Insurance Society. Only 33 programs internationally and about 19 in the US received this designation, and we're super proud of it. There's more to come. We just hired 2 additional full-time faculty members to teach in our program. They just joined us this fall semester, and that basically doubles our full-time faculty count. As most of you has probably heard in the news, the Board of Regents in July approved a new undergraduate risk management insurance major. We will keep the certificate and add this new major for students who really want to learn more about the insurance industry and make it their major. This program will start in the fall of 23, so basically 1 year from now, and we're super excited about that. Our goal is pretty clear. We want to up our game, improve our reputation, and become a top 10 program nationally. And I'm 100% sure we will be successful for one simple reason. This industry is so dynamic and offers so many great career opportunities that nobody can resist, especially not here in Iowa, where risk management insurance accounts for 11% of the state's GDP. That's pretty much the largest industry right after agriculture. And this brings us to our topic of today, careers in risk management, and to our great panelists. So we have 3 panelists with us today. Leah Feldman, a client executive with Holmes Murphy. John Abdo, a commercial insurance underwriter with UFG in Cedar Rapids. Kate Rarick, a senior commercial underwriting director with Nationwide, calling in from sunny Arizona. So let's get started. Could each one of you please briefly introduce yourself and maybe also share your favorite Tippie memory with our audience? What are you looking back to when you think about your time here on campus? So maybe let's get started with Leah.
Yep, thanks, Thomas. So I graduated from Iowa in 2018 with a degree in finance, and then I also had the risk management insurance certificate. And then I moved to Des Moines right after graduating and started with Holmes Murphy. So I've been at Holmes Murphy for 4 years now, which seems crazy, but all 4 of those have been as a client executive, and I've been focusing on property and casualty sales for small to mid-sized businesses. And then one of my favorite memories from college through the Risk Management Insurance Institute was our senior year. We got to go down to Dallas it was a conference and career fair. And it was sponsored by the Vaughn Institute. So we had, I think it was probably 10 students that went down and just had a ton of fun meeting other students from across the country that were involved in the insurance programs, and then just meeting other companies too. And then we obviously had a lot of fun down there as well. But then one of the things I look forward to most coming back to Iowa City is actually back in Iowa City a couple of weeks ago for the Iowa State game. But that's always what I'm looking forward to when I'm back in Iowa City is tailgating. Love the football culture in Iowa City still, and I'm just hoping to get our winning streak back on track with Iowa State.
Go Hawks.
Go
John,
Hawks.
you're up next.
Thanks, Thomas. My name is John Abdo. I graduated from Iowa in 2017. Like Leah, I got the RMI certificate along with my finance degree. I spent the first about 3 years of my career working for a large life insurance company who also had a wealth management arm. And then about 3 years ago, I came to UFG to work as a commercial insurance underwriter. So wife and I currently reside in North Liberty. It's not too far from the campus stomping grounds. So I get back pretty often, and I always enjoy going to some of the restaurants downtown, like Bluebird and Hamburg Inn. We do have a Bluebird in North Liberty, but I don't think it's quite as good as the one downtown. So, and as far as favorite memory goes, a lot of good memories to choose from, but frankly, I really enjoyed finals weeks. There was just something about that week where you just got to, you studied hard, of course, but you also got to have fun, and just the hunkering down in the IMU basement for hours at a time and grabbing popcorn and pancakes and all the good handouts the university gives during finals week. I just enjoyed that season of the semester.
everyone. My name is Kate Rarick, and as Thomas said, I do now reside in Arizona. I moved here about 5 years ago or so for Nationwide Insurance, which is where I currently work. I graduated in 2009 with a marketing degree and then also the risk management insurance certificate as well. Leah brought up a favorite memory of mine, actually traveling for the RIMS conference with the University of Iowa. So I won't necessarily talk about that one, but I absolutely love the Hamburg Inn and Oasis hummus. I really miss. We don't have that here in Arizona, and you can't miss a football game. So hopefully headed back here around the 28th for the Northwestern game.
Awesome. So let's jump right in there with our first question for our panelists. During the last 15 years, risk management has received much more attention in the corporate world and has risen to prominence. I mean, we had the 2008-2009 financial crisis. Cyber risk is everywhere now. There is an increase in frequency and severity of natural catastrophes. It looks like we read about wildfires every other day in the newspaper now. There's an increase, in supply chain disruptions, and we just lived through a pandemic. So from your experience and your interaction with your clients, what changes and trends do you observe? And how do you expect the industry to evolve? So maybe let's start with Leah again.
Yep, that works. So I haven't been in the industry for too long yet that I was able to, observe some of these trends firsthand. But everyone keeps telling me that the soft markets usually last a lot longer than the hard markets. I've only experienced a hard market so far being in the insurance industry. And just what I've seen so far, I just think that we're going to be in a hard market for a lot longer than maybe we've ever seen in the insurance industry. I mean, you touched on both of them. Property and cyber are really crazy right now. 2 years ago, when I was trying to get a cyber policy for clients, I could get cyber for anyone you could answer probably 5 questions and I could get you a cyber quote. Now we're seeing that rates are skyrocketing with cyber, and underwriters need a whole list of information before they'll be able to offer terms. And I mean, 2 of the biggest things, you have to have multi-factor authentication and you have to have endpoint detection. Otherwise, you just won't even be able to buy cyber insurance. So I think that's a trend we've been seeing that's just going to continue. Same with rates. And then the same thing goes for property. Property rates have been going up significantly, a lot due to the increased costs in construction since we've been living in the post-COVID era. And then also just a huge increase in catastrophic weather losses. So I think something that I could say that the carriers have been doing to somewhat combat that is we're seeing a lot of wind hail deductibles applied to property now. So that's something that we're having to really talk through with clients, is they could have gone from a $5,000 property deductible to now all of a sudden they're paying a 3% out of pocket cost for wind hail before the insurance will kick in. So they're just having to put a lot more skin in the game for losses. And I just see that to probably just continue, and if not get worse in the coming years.
Okay.
Yeah.
John,
I'll
what are
piggyback
you?
off of that. Yeah, I'll piggyback off of that. The weather catastrophes are definitely what we're seeing. And I primarily work in Midwest states, so that's certainly an area of focus for me right now. But even if you're not in the Midwest, right, if you're on the East Coast, you've got your hurricanes. If you're on the West Coast, you got your fires. So there's really not a part of the country, unfortunately, that's not being impacted to some extent by increased weather patterns. So Leah hit on some of the big things that carriers are doing. Of course, rates are going to have to go up to meet the increased exposure, but that's not, you can't just raise rates indefinitely, right? So I do think long-term the industry will have to try to influence stakeholder actions rather than focus exclusively on pricing. So politics aside, I just don't see the problem getting better unless some of the underlying causes of climate change, in this particular example, with increasing weather patterns, are addressed. Yeah, and then I'll also speak briefly. There's another trend we're seeing called social inflation. It's kind of a buzzword right now. And basically what that refers to is, the propensity of judges and juries to hand out higher awards to plaintiffs than they would have in the past for very similar kind of claims. So as its name suggests, it's driven by societal attitudes and perspectives. So anything from the amount of advertising that goes into legal matters to expanding class action lawsuits to just public perception of corporations. We're definitely seeing higher liability payouts in the marketplace right now, which is, it's hard to underwrite for that. And so I think carriers are kind of scrambling to figure out, how to manage that exposure.
Yeah, Leah, it's interesting. You talk about property in the hard market and property, and John, you talk about social inflation, and that's exactly where I was going to go with that. We're thinking about inflation, and Thomas, you talked about obviously supply chain issues from that lens. We're seeing that in our claim payments, whether it's property and now casualty from that social inflation perspective. And so how do we continue to push rate into our book that's obviously acceptable to be able to return a profit, understanding that we're probably having our losses develop as we sit today because of the changes within the marketplace. And so that's definitely something that's on our radar as I lead underwriters across the country. And also just thinking about, from a consumer and small business perspective, we're starting to see some consolidations of companies, some closures of companies. And so how do we maintain, conversations about buying power and who really affects that from that lens? So it's a little bit of a perfect storm that we do have weather out there, but there's non-weather actions that are really affecting the industry from that standpoint. So it's important to kind of keep both front and center.
Yeah, absolutely right. The risk landscape is always evolving and new risk emerge. We have already talked a little bit about cyber, but I would like to go a little bit further in this direction because it's a risk that is a good example of one that is becoming mainstream. The Cedar Rapids School District here in the area just had a recent security breach that was all over the media. So based on your experience, what role has the insurance industry taken on with respect to cyber, and what additional services could the industry offer to help clients? Or, more generally, how can the industry help clients to deal with new risks? So who wants to go first again? Leah?
Yeah, I can kick it off. So I kind of hinted at this in the previous answer, but I think it's only getting tougher and more expensive to purchase cyber coverage. I think carriers have done a good job with at least offering a small amount of cyber coverages in bot policies and package policies. The thing that goes wrong with that is that those typically don't provide coverage for cyber crime type activities. So it doesn't provide your ransomware attack or social engineering type coverages, which is usually a company's biggest exposure. So they do a good job of building those in, but you also need to educate the client on the back end then that it's not a full cyber suite. One thing I think that the industry could do better as a whole is to help direct clients to a good, easy source for how they can adapt cybersecurity measures that are being required by insurance carriers. So, the multi-factor authentication, the endpoint detection, a lot of small businesses don't have those currently, and they don't really know the first step on getting those employed in their systems. So just having more easy resources for them on that kind of stuff is, I think, where we could do better.
Yeah, that's a good call. So we offer 3 different coverages, but when I think about how the coverages embody cyber, a lot of it is like reimbursement, like helping notify clients and defense and third party claims from that standpoint, and or restoring credit history, for those who have been affected. And a lot of it is almost a reimbursement. But when you want that total package, it will come maybe from Hartford Steam Boiler, and a lot of times it's reinsured too, because some of those claim payments can be quite high. And so there's opportunity in that space for a carrier to come with the full package, but it's not going to be cheap. The reimbursement coverage is rather cheap from my perspective working in insurance, So that's interesting from your perspective too.
And if I might speak, more broadly to the question about how do we, in our industry, help clients deal with new risks. And I think at this point, it's important that we take a step back and just remember that insurance is really just one piece of the risk management puzzle. So if you put your thinking cap back on and think back to your fundamentals or your principles of insurance course, right? You've got risk transfer as a strategy, but you also have avoidance, reduction, and retention. And so I think as insurance professionals, we really have all four of those tools at our disposal, and we have the job of educating clients and helping them make informed decisions about how to mitigate risks. Insurance, it's clearly a very common piece of the puzzle, and probably is going to be necessary when it comes to cyber insurance in particular. But as the other panelists have discussed, there are avoidance and reduction measures as well that clients need to consider and have a plan in place for.
Absolutely. And what I've also heard from some smaller companies is just that they appreciate having a point of contact when something happens. And it looks like an insurance policy also simply provides easy access to those services, a number you can have on speed dial to deal with situations like that. Okay. So let's move from risks associated with technology to the benefits of technology. The insurance industry is a very innovative industry, especially here in Iowa. We have the Global Insurance Accelerator in Des Moines. We have venture capital firms specializing in the insurance industry in the state. We have insurtech firms developing new tools, and of course, all the established firms are adopting new technology to improve and basically reinvent their business. So from your point of view, what technology has changed or is changing your organization, and what is your perspective on how technology is changing the industry overall?
I can kick it off again. So from the small business perspective, I think that technology has changed the underwriting process for small businesses significantly. A lot of the quotes that I get for clients, I never even have to talk to an underwriter for, which I think, 10, 20 plus years ago was never the case. I think, your relationship with your underwriter was probably the most important relationship that you could have, which is still true for us in a lot of cases, but now just so much of it is just online based. Most of our carriers that we work with have online rating platforms for the small business industry. So I can just simply go on, enter all of our insured's information, and get a quote for them in a few minutes that I don't even have to talk to an underwriter for, depending on what industry they're in and what size they are. So I think technology has absolutely changed the game there, made stuff more efficient for us getting, quick quotes out to insureds. On top of, there's so many direct insurance companies now that small businesses can just go online and quote themselves. I'm not sure exactly how great the coverage is and if they're doing it right, but I think we're only going to see more and more companies come out with stuff like that too, especially for the small business space. Speaking as Holmes Murphy as a whole, we've partnered with a few other independent brokerages 3 years ago to start a new accelerator program called Broker Tech Ventures. So we've had 3 classes now. Each class is consisted of 12 companies that we have helped these startup insurtech companies with getting started essentially from the ground up. And the focus of all of these companies that we're helping out are supposed to be to, innovate technology for the broker client relationship and experience. So it's something that our firm is focusing significantly on. And I think we're going to see that part of our business grow a lot in the coming years as well.
I think I'd add a couple of things to that too. The on-demand ask from agencies is loud and clear, making sure that you can give an answer within a consolidated question set even for, small commercial accounts, that might be $50,000 to a certain degree. It just kind of depends on the risk and operation and what third-party data can be folded into that relative to their operations. And so I like that, but I also think that comparative raters have actually come quite a bit more in commercial lines in the past couple of years, where historically that was more of a PL play when you were looking at quoting an insured, 3 or 4 different companies. And so, these days from a small commercial lens, if you're not showing up in a comparative rater for agencies to compare and contrast, you might also be losing that business, not just investing in one carrier and submitting it on their system. And so I know that that's one thing that we've been looking at from Nationwide is how does our API enabled operation fit into that, and what products do we want to show up in that space and be competitive at, depending on where we want to operate nationally and in what risks. So that's one thing that we have been looking at quite a bit. And then not just online quoting, but if you have an endorsement, change an auto, change a driver, those types of things, you would send it into a carrier and get a 2-week turnaround in yesteryear, and now they might need it for, say, ID cards that day. And so trying to come out and create opportunity for agencies to self-service and on demand is definitely something that's been asked in the marketplace. I don't think there's one carrier out there that does it well. We're all trying to get there.
I don't have a lot to add. I think Leah and Kate did a good job here. I guess the one thing I'll say is, from an underwriting standpoint, with all the use of technology that we have, I don't see us getting to a place where the need for human capital goes away anytime soon. From an underwriting standpoint, at least on the commercial P&C side, it is gray. There's a lot of gray decisions that have to be made and complexities. And so even with all the data and technology you have, you can't capture a business owner's attitude towards safety very well with technology. You can't capture the risk control measures or practices that a business has in place very well with technology. So there will be always, I think, a need for the people at the end of the day. And at the end of the day, also, we're in a relationship business, right? So no matter how convenient technology is, people want to do business with people they like. And so, I think it's the balance is figuring out how to use technology effectively while still making sure that the people side is doing what it needs to do.
John, you're spot on with that. We need human element, right? From that risk management technique standpoint. I think what technology does, though, is enable small commercial to maybe grow a definition. And what does that really look like? And how do we focus on the accounts that really need us versus one where analytics will tell us or directionally tell us a price to cover expected losses in the future? And so there's definitely almost a marriage between technology and us looking at it on the back end and what we can bring to the table too from loss control, underwriting, claims from that lens as well. So it's a great call out.
Okay, let me bring in questions we got through the Q&A tool here to keep it a little bit more interactive. And so we talked about technology on the underwriting side with agent support, helping with mitigating losses. But that question now pretty much focuses on identifying risks, especially emerging risks. So what do you see out there that might help clients or small businesses better identify new and emerging risks and figure out how they would like to deal with it?
It's a good question. I guess the thought that comes to my mind right away is the need for enterprise risk management, right? Which is kind of the focus of, or less focus on your traditional hazards that businesses are exposed to, but thinking more broadly, what are not only our risks, but what are our opportunities? So some businesses, I think, have the capacity to have people on staff who are actually, that's their job, is to identify those total at an enterprise level. But otherwise, I think that's where the insurance professional comes in, insurance consulting comes to identify those. Those are my initial thoughts.
I think it's important to have people focused on that within a company. So one of the things we have is we have an innovation team, and they're kind of responsible for maybe looking out like what's trending in the marketplace, what are we seeing in that sense, and then how does that translate, if it translates to becoming an insurance coverage. I think one of the ones, I believe it's called PFAS potentially, but it's a chemical. It's called like the forever chemical that has been uncovered in really anything, manufacturing, potentially food, et cetera. And they started to see lawsuits come from that chemical that was manufactured. And so what does that look like? Is that the new ethos that we dealt with from a construction perspective years ago? So understanding and kind of staying ahead of that and the trending, getting a little bit back to social inflation and what different jurisdictions are doing, is good to have somebody do that within an organization. And we do have an innovation team that stays tight to, anything from financial to what we insure, P&C, life, financial as well. So it's good to have a focus in that space.
Something I get asked a lot from clients is talking about, emerging risks, is a lot of them are already afraid the next time that a COVID-19 is going to happen, because something that happened this past time was, you had restaurants and a lot of service businesses have to shut down for months and trying to turn in claims because they weren't making money for 3-4+ months, and it just didn't fall within a business interruption type claim. So I think something that a lot of clients are looking at now is, pandemic as an emerging risk, and what is the insurance industry doing to help businesses when this eventually happens again? And it's a tough answer because there really isn't an answer for that yet, because insurance, typically hasn't been to cover pandemic related events. So I'd be curious to hear just some more news come out about that, and if there's any conversation going on, because it is a question that I get a lot.
Great point. So let's talk a little bit more into, or let's dive a little bit more into big data and data analytics. I mean, we now have so much data available and tools and the ability to analyze data to make more informed decisions. I mean, thinking about catastrophic models, we are able to better predict hurricane tracks nowadays. There is the Internet of Things. We have heating systems we can control remotely, ovens and refrigerators that send us texts or want to talk to us. Cars collect data in a real time. And that leads us to the question whether we should envision products where we continuously classify, price, and underwrite risks, and whether clients might really be interested in such products or rather prefer to stay away from them and stick with traditional yearly contracts. So from your point of view, and your experience, to what degree do your companies already use big data and data analytics today? And where do you think this trend will lead your company and the industry moving forward? So,
John or Kate, you want to kick this one off?
I could take it. Absolutely. So I think we have too much data, quite frankly. I'll be honest in that space. As you look at however you want to slice and dice it, I think you can then tell a different story depending on the data. As a consumer, one of the things that comes directly to mind for me is Nationwide has a product, which a lot of carriers do, but called Smart Miles. And it actually came out before COVID. And so it's a little thing that you inject in your vehicle, and it tracks your miles. It tracks when you drive. It tracks how often are you driving, what hours are you driving, and what days of the week, et cetera, and really gathers data based off of your experience. But where the rating mechanism comes in, obviously, the less you drive, the rate is going to be better because the propensity for loss is not going to be there. And so having that product come out prior to COVID was intriguing. A lot of people switched to it because we didn't drive as much in the unknown of what was going to happen in that space. And so obviously getting a better rate for the exposure when you're not driving as much is definitely something that people enjoy and a reward from that sense. We also have Smart Ride, which is, as a consumer, the one that I utilize from that standpoint. And it doesn't track miles, it tracks your driving behavior. So are you a quick stopper? Do you, in pretty much tracks everything that Miles does with a little bit more of the behavior lens from that perspective. And then right when you're done with it, it sends you a 28, I'll give you my score, 28% credit on my personal lines auto policy. And so doing more of that and having more of that even translate into the commercial industry is really a necessity to evolve with the needs. We want as consumers to move quickly and fast with adequacy. And so the carriers have to really do that from that lens as well. From a commercial lens, there's stuff out there that can detect potential slip and falls now. So as you think about, when you insure your mainstream bots, is that something that you can offer to help protect them from slip and falls and those med pay deductibles and potential lawsuits? And I know that's out there now, and it's really cool infrared technology. So there's a lot that's out there that's quite interesting. It's just getting the buy-in of the insureds and customers as to why you want to do this and install this to really help them from that lens is definitely something that we strive to work towards as well.
Awesome. John, do you want to go next?
I don't know that I have much to add. I think Kate knocked that one out of the park. Yeah, as far as consumer buy-in goes, I guess I'll add, that companies have to be careful not to be adversely selected against. So, it is one of those deals where, how do you get enough people and enough representation from your consumer base to opt into this sort of program or technology, to make it efficient or to make it productive in terms of establishing rates and understanding your exposure. So I think that's always something carriers have to keep in mind when they're trying to roll this product out. But I mean, I use all the products Kate just described, and they save me money.
Yeah, on my end, so Holmes Murphy is celebrating our 90-year anniversary this year. So with 90 years of being in business, we have obviously a lot of data. And I think anyone at the company would say that historically, we probably haven't done a great job at utilizing that data well. So we actually just recently in the last few months hired our first chief analytics officer to help us specifically with that. He's going to essentially be tasked with looking over all the departments of Holmes Murphy, gathering data so that we can improve risk management programs for our clients. So, trying to figure out what can we implement to improve clients' safety behaviors through all this data that we've collected. It's all a little bit over my head, but I'm trusting him with absolutely killing it and running with it. So we're happy to have him on board. It's probably one of the best investments that I've seen Holmes Murphy make since I've been here for 4 years. So we're excited about that.
Yeah, and I mean, big data is here to stay, and data analytics tools are very powerful. So there is no way we'll ever completely turn around and ignore that. However, it's also interesting to know how far we want to push in this direction. And we got one question in the Q&A tool that pretty much focuses on this line. So the point is that for some clients, not knowing what we don't know may be beneficial. So the question is, have your companies thought about where to draw the lines between using big data and benefits to clients that some information stays private? And it's a big open question. What are your thoughts on that?
Kate and John, I feel like this is a good one for you guys.
Yeah, this is a great question. I don't know if I have the best answer, quite frankly. Every company is going to gather data, but in my opinion, if you can't put a trend to it, it's not worth investigating or sharing. Meaning if there's not something that comes out of the data that says, oh, we could provide this coverage or this answer, or this recommendation to avoid, have loss avoidance in the beginning, I wouldn't necessarily say that we do anything with it, because we don't necessarily have a trend that might emerge in the marketplace. So I don't know if I'm hitting the question from that lens, but that's maybe what I would share from that standpoint.
John, would you like to add anything?
I don't think I have anything worthy to contribute on this question, so I'm going to sit this one out.
If I had to put my underwriter hat on, I would think the more information, the better, but.
Yeah, there is no right or wrong answer, and we will probably see different trends and different decisions in different countries, because it basically boils down to personal preferences and whether clients prefer privacy over, getting the best rate and perfect pricing. And it's more of a question of what preferences people have. My feeling is that in European countries, we will probably, insurers will probably be more hesitant to use, big data in a broad way and go into very detailed pricing differentials. Here in the US, I think we're going in this direction for a little bit longer, and then we'll see when we encounter some pushback. So it's definitely an exciting area with lots of great job opportunities moving forward. And that also brings us to our next topic area. So I'd like to switch gears a little bit and talk about careers and career advice. And after that, we'll open it completely up to questions, and it looks like there are more coming in. So if a student or a young professional is excited about risk management insurance and considers a career in the industry, what advice would you give? What are standard entry-level positions, and how do you get started? Leah, do you want to start us off here?
Yeah, I can. I think the best first thing you can do is talk to people on either side of the industry. So talk to people who work with the insurance carrier, and then also talk to people who work for brokerages and agencies, because even though we're all in insurance, they are very different from each other, and we have very different positions available. I think I have to give a shout out to Phil Brooks, who I think I saw is on the participant list, because I think he was the one who told me to just go into sales, and I couldn't be more thankful to him for that, because I really have been loving it. But on the agency / brokerage side of things, the starting positions really are probably more on just specifically either the sales side of things or the customer service side of things. So you can either be starting out as an account manager where you're helping process certificates, sending in endorsements for clients, doing data entry type stuff into our agency management system, or you can be getting your feet wet, starting in sales, shadowing people, stuff like that. And I know the positions on the carrier side are vastly different than what you can see from the agency or brokerage, but I do think, at least once you get your foot in the door at any sort of insurance company, I think you see pretty quickly just how many different hats you can wear within the insurance industry. You could start out in a customer service type role, decide you hate it, and go work for the marketing team or the IT team. There's just so many different things under the roof of an insurance agency or insurance carrier that I think people forget about. And you see that after you start. But I think the key is deciding if you want to be on the agency side or the carrier side, and then, get your foot in the door that way.
Yeah, I agree with Lee. Something I felt, I don't know, I had expectation when I graduated college, but I really felt that I had to be in the perfect job right out of school, my first job. And I just don't think that's super realistic. I think a lot of learning comes through doing. And so, yeah, I would say jump in and try to learn as much as you can in your first role, and you can figure out what you're doing from there. As far as positions at UFG, yes, we absolutely hire entry-level positions right here in underwriting. We actually do hire a lot of Vaughn Institute grads every year, so there is a seat for you at the table. And my piece of advice for you starting out would be try to understand the bigger context for the work you're doing. So what I mean by that is, try to start big picture. What is the insurance industry about, and what goals is it trying to accomplish? What needs is it trying to meet in our world? And then from there, where's your company fit into that? What is unique about your company? What product offerings do they have, or approaches do they have that maybe make them different from other carriers or other competitors? Once you've established that, what is your department's role? If you're in underwriting, how does underwriting contribute to the overall direction or vision of your organization? And then lastly, what's your role on your team? How does your role contribute to the team's success? And I found that helpful, just to take a top-down approach, because it gives your role a little bit more, I think, significance. It helps you to take more responsibility, I think, over what you're doing on a daily basis to drive results for the organization. And I think it also creates an environment that breeds creativity and innovation. If you can think about the big picture and get the context straight first, then you understand or have the opportunity to find solutions, maybe to do things differently that benefit the greater organization.
I think a couple of things I'd add. I would say internships. I had 2 internships, one at a larger agency out of Cedar Rapids, and then one with Allied Insurance, who I still work for today. And in those internships, I did anything from trucking to finance to marketing and personal lines underwriting. And so really got a taste of both the agency and carrier side, to Leah's point earlier, but definitely start early and figure out, what interests you. I think people think of insurance and just think of an insurance, but it's also a company too that has the IT, the marketing, the advertising from that lens. So that would be advice. And I actually, outside of my internships, I started in claims at Nationwide Insurance, and I would strongly suggest looking at claims. It is a very tough career, but right out of the gate, you're learning how to read your contracts, your policy language, you're learning how to apply it, and you talk to underwriters relative to on the front end, and they put it on the books. You're looping in your sales partners for tough claims, but you're also talking to the customers. You're talking to agencies, you're negotiating bodily injury claims, auto claims, and it's really hard. You learn empathy, you learn how to negotiate right out of the gate, and it was a valuable experience from us. Not saying everybody has to enter the industry from that lens, but it really does set you up for success to be able to take those customer conversations in different parts of the organization. But at Nationwide, we also hire entry level in quite a few areas, sales being one of them, underwriting being one of them, claims being one of them. And we have a large member services area too, that you can learn quite a bit about the policy as well when you're answering billing questions from that lens. So Nationwide has about 26,000 associates, and I'm speaking more from the P&C lens just because that's the team that I lead, but we also have pet insurance, which I know a lot of people can relate to. If you have a dog or cat at home, we have financial, life, annuity, kind of all of that wrapped into one, and also a big real estate arm that a lot of people don't know about. We own quite a bit of real estate across the country, which has been great to diversify ourselves, especially in years where we're seeing some tough claim payments due to inflation and property issues as well. So find a company that's diversified, because that will help you in the long run, especially when you come into financial crisis, like sometimes we will in recessions as well.
Great advice. So looking back at your career, maybe during the first year, what did you find most challenging, and how did you overcome the challenge?
One of my biggest challenges, I guess, getting started was just coverage knowledge, and then also navigating our carrier relationships and carrier appetites. Coverage knowledge, it's just, there's so many different parts to property and casualty insurance to know. And so I just felt like there was a little bit of a gap between, just coming from college and then feeling like I need to know everything on the first day. There's no way you'll ever be able to know everything, even within the first year. So it just takes a lot of time. Going for designations helped with that. Just diving into work helped with that, and a lot of just conversations with people around the office. But then carrier relationships too, just from the brokerage side of things, we work with so many different carriers. Every single carrier has a different appetite So just being able to figure out, which carrier wants to take construction, which carrier is fine with writing an apartment building. It just took a lot of time working on a lot of different deals to really be able to remember that carrier appetite and know where to best place clients with and where to go to.
I would say one of the most challenging things for me when I came out of school and entered the workforce was just earning credibility and wanting to have credibility, especially with agents or coworkers who have been in the business for decades, right? So there's a big learning curve there, and not wanting to come in and look like I had no idea what I was talking about. So I think Leah, mentioned one of the items, pursuing designations is a great way to learn and to have some sort of objective metric that says, hey, John knows what he's talking about as far as this material goes because he has this designation, that sort of thing. But the second thing would be ask questions, be genuinely curious, have a genuine desire to learn. Asking questions is not a bad thing at all. And I think along with that, it's okay to say you don't know the answer. So you got to be really comfortable with telling people, hey, I don't know the answer, but I will look and I'll get back to you, give them a specific time and actually follow through on that. So no one expects anyone to know all the answers, especially when you're fresh out of school. And so I think having some grace with yourself, but as I mentioned, working hard, asking questions, and then knowing where to find answers is super critical.
Great advice. Similar to what I was thinking about too when you asked the question, Thomas. I think from my standpoint too, what I really enjoyed about college is like when you were done with finals, you were done. Like that was it. And you moved on to the next class. Turns out work never stops. So you really do have to have boundaries and a good work-life balance, because I could work 24 hours a day and still have something to do the following day for 24 hours. It's a very busy industry. Even though we're selling a promise with a contract, there's a lot that goes into that to make a company run. And so really that work-life balance was definitely something that was challenging at first. And you have to have boundaries. I do think COVID has, maybe if there's one good thing that comes out of it, it has helped people set more boundaries and understand what's important at all levels of your personal and professional life from that lens. So I'd offer that. I'm a big designations person as well. Nobody can ever take away your education. And so if you can get out and get your, CPC or AU or start your CIC classes, those are things that just really invest in yourself for long-term success, but also show people within your company that this is more of a career than a job, and you want to invest as well within the company. And so I started those and got them done before having kids. I would also recommend doing that, because then they take over your life. And you don't have a whole lot of free time. So those are a couple of things that, as reflecting, that helped me.
Yeah, I can endorse that statement. We have 4 kids and they definitely keep our life interesting. So I'd like to end on a positive note. We have 4 minutes left. So could you share with us what aspect of your job do you like the most? Leah, do you want to go first?
Yeah. So especially since I work with small business owners day in and day out, my favorite part is just the educational piece. A lot of the buyers that I work with aren't very well versed in commercial insurance. So really talking them through exactly what they're buying so that they can get their head wrapped around the coverages that they're purchasing, I've really found just, I guess, that to be rewarding. So I like to say I take a little bit more of a consultative approach to selling rather than your typical sales approach. So really just acting as a commercial insurance consultant rather than anything, just really working on that educational piece is something that I've really loved with my role.
Yeah, relationships are definitely important, and building those relationships is absolutely rewarding. It's the same here in the classroom. So John, do you want to go next?
Sure. There's a lot of reasons to be in the insurance industry, but Thomas said we had 4 minutes, so I'll just try to give 1 or 2. It's a really, really important industry for the public. I mean, you look at not only, Kate said it well, we're delivering a promise, right? So you think about the fact that without that promise, there'd be a lot less innovation, there'd be a lot less risk taking from consumers, from businesses. And so you really are looking at an industry here that is the backbone of any healthy economy, not to mention a lot of money that gets poured back in, on the investment side. So there's not a lot of industries I can think of that are so critical to the functioning of an economy. On a more personal side, I totally agree with what Leah said. I think, in the insurance industry, we have to admit there is a public perception of paper pushing, of slinging something that people don't need. And that's not been my experience when working in the industry. There are a lot of good people who are, as Leah mentioned, taking a very consultative approach. And so I think we not only have an opportunity, but we also have a responsibility to be trusted advisors who are educating clients and helping them make informed decisions on the risk that they're taking. And that's what excites me. Even from an underwriting standpoint, my customer, so to speak, is the agency, is the production side that Leah's part of, but we get to still have the same conversations about figuring out what's the best solution for the client and how do we ride there together. And that is exciting.
Yeah, common theme here from my purview, agencies and ultimately our customers are what really keeps our lights on from that standpoint. But I would also add that my team actually consists of around 400 underwriters across the country. And so it is so fun seeing them learn and grow and work with agencies, and the amount of agency compliments I get relative to their service and knowledge and expertise is so fun and rewarding to just see people find this as a career from that lens. And so I'd say the leadership aspect now of the operation is most rewarding.
Awesome, thank you. And that pretty much concludes our panel discussion for today. Before I hand it over to Ashley, I just want to share one brief thought. When I was reading the paper this morning, there was an article about sanctions against Russia and that the European Union had to clarify that fertilizer shipments out of Russia into developing countries are not subject to sanction. And the most important clarification was that it's okay for insurance companies to insure those shipments. And that just gives one example that without insurance, our economy can't function. This little industry has a disproportionate effect on our whole economy. I would even go as far as to say, without insurance or another effective risk management transfer tool, there would be no innovation. So it's an exciting industry with great opportunity careers and career opportunities. And with that, I'll hand it over to Ashley to close us out. Thank you all.
Thank you, Thomas, and thank you all of our panelists, and thank you to our participants for attending today's alumni panel, The Business of Risk Management. If you have any other questions, please contact our panelists at the information on the screen. When our webinar ends in just a moment, you'll see a quick survey. We'd be grateful if you could share your thoughts and help make future virtual events even better. On behalf of the Tippie College of Business, thank you so much for joining us this afternoon. Have a great night. And as always, go Hawks.